Hello and welcome back to Tax Crunch. My name is Christopher Volas, and I've been presented recently with a couple questions on the Employee Retention Credit, the ERCs. So I figured I'd make a couple quick videos addressing the topic, since reading on the topic makes the average person respond like. So I'll split this into two videos. The first will address the ERC wages paid in the year 2020, and the second video will address the ERC and the rule changes for the wages paid in the year 2021. So in this video, we'll discuss the original ERC that was created back in March of 2020. It's effective for any wages paid after March 12th through the end of the year, December 31st, 2020. The new Tax Relief Act, passed in December of 2020, revises some of the rules for the original ERC. So even though we're now in 2021, you can still amend payroll returns for 2020 and get that ERC and get a tax refund. So what is the ERC? It is just what it sounds like. It's a tax credit rewarding employers for retaining employees during the COVID-19 crisis. It's just another way to subsidize workers and help ease the strain on the unemployment system by keeping people employed. So who's eligible? Well, first keep in mind this credit is broken down by quarter. So if you meet the eligibility requirements for just one quarter, you'll get the tax credit for that quarter, while some others might meet it for every quarter. So think of this credit as an opportunity, a separate opportunity in each quarter to grab the tax credit. So in 2020, you have 4 quarters, but the first quarter is extremely shortened because the credit's only available for wages paid after March 12th. So they only have 18 days available in that first quarter, but the remainder of the 3 quarters are all full 3-month periods. So in order to be eligible for the ERC for any particular quarter in 2020, one of 2 things has to have happened. Either you had to be partially or completely shut down by a government order, or your gross receipts, your revenues, had to decrease by 50% or more compared to that same quarter in the prior year. So if you're looking at the 3rd quarter of 2020, your receipts had to have decreased by 50% or more than the 3rd quarter of 2019, and you'd be eligible for that quarter. If either of those conditions did not apply in 2020, you're not eligible for the ERC, and you can leave the video now.
Michael.
Oh, hey, Toby, could you close the door on your way out?
And another thing, if your business averaged over 100 full-time employees in the year 2019, the only eligible wages for the ERC are those that were paid to employees that were not working. So this truly is rewarding the employers that were paying employees that were not able to work. If you had 100 or fewer employees in 2019, average full-time employees, all the wages are eligible. So if your business had more than 100 full-time employees in 2019, your accountant has probably handled this issue already. If they haven't, you have bigger problems to address, so you can leave this video now too.
Get the hell out of here. Nice manners, bitch.
All right, so everyone who has employees knows that they file a 941 form with the IRS every quarter to report the wages, the taxes withheld, and the employer taxes. If you're eligible for this credit in that quarter, you can amend that 941 to reflect the ERC and get a refund. So what is the credit? The credit is 50% of the wages for each employee up to $10,000 per employee per year. So essentially, the credit maxes out at $5,000 per employee. So in addition to analyzing each quarter separately, you'll also be analyzing each employee separately each quarter. Now technically the credit is just based on the employer portion of the Social Security tax, which is 6.2%. But the ERC is much larger than that, so the remainder is either applied to the other taxes on the return, or it's refunded if all the taxes have already been paid. So the new tax relief issued in December of 2020 has revised some of the rules on this 2020 ERC. Previously, if you received a PPP loan, you were not eligible for the ERC. Now you are. You still can't double dip, So if you're getting loan forgiveness on those PPP loans, those wages that are calculated in that PPP loan cannot be also calculated for the ERC. But the PPP loan does not cover the whole year 2020, so it's very possible that you'll have some portion of the 2020 year eligible for the ERC as well. Also, health insurance expenses paid for employees but not included in wages are added to the calculation for the ERC. This also includes healthcare expenses paid for furloughed employees. Now, if you're an S-Corp owner, yourself and your spouse can include your wages in the ERC calculation. The only ones that would not be included would be other family, parents, children, grandparents, nephews, and nieces of any shareholder that owns over 50% of the S-Corp. Those are the only ones that would be excluded. So in summary, have your CPA check out your 2020 numbers, your 2020 payroll, to see if you're eligible for this ERC, amend those payroll returns, get a cash refund. Check out my second video to see about the rules and the eligibility for the 2021 ERC. Subscribe to the YouTube channel, and thanks again for being part of the Tax Crunch community.